Here's an email from Mary. The subject, Waste Connections. What do you think of Waste Connections? Shall I sell my shares of Progressive Waste now or take the stock of Waste Collections? Because, of course, Waste Connections is buying Progressive.
That's right. In effect, it's sort of a reverse takeover. They're they're going to roll themselves into BFI. But the upshot is that this is going to be a really interesting company. We were shareholders in BIN. And we'll take the shares of Waste Connections. You take two companies that have slightly different footprints, you put them together, there's going to be some cost savings. This is a company that will be dependent on the domestic economy in the U.S. Domestic economy in the U.S. is improving. You know, waste volumes are pretty dependent on just a slowly growing economy. They're going to be able to take a lot of costs out. They're also going to wind up with a much lower tax rate. This is one of those inversion deals where you've got a company that was based in a higher tax regime moving into a lower tax regime. So it's going to be like a 10% difference in the taxes that necessary to be paid. This will I think, do quite well over the next couple of years. So I would take the shares of Waste Connections.
Let's head to Hamilton, Ontario. Henry, go ahead, please.
Good afternoon, gentlemen.
Good afternoon.
Celgene at 104, overpriced or fair value, especially given the political climate, et cetera, around healthcare. Your assessment, please.
Thank you very much.
So I think that we're in a tricky spot in the market. I think there's really about three main camps that you can focus in. There is the stuff that was working heading into the correction. And really the stuff that held up the longest was consumer discretionary and technology. Okay. Healthcare had done very well up until about October of last year, and then with some of the political rumblings coming, you know, biotech got very difficult. And while there have been a few stocks that have reversed higher, I think the jury's still out. I think that this is going to continue to be a political spot. Now, a lot of the biotech companies are not expensive, especially even relative to the larger, more traditional pharmaceutical companies. But you have to recognize that there's going to be continued sort of political football in the air. So we like healthcare as a space. You could buy Celgene. The chart is not particularly good. It's a great company. I would prefer to wait and see some establishment of leadership in biotechs before I put new money to work in this space. So I think I would wait on that.
Okay. Vancouver is on the line. Jerry, please go ahead.
Good morning, Andy and David.
Hi there.
David, can you please give me your view on Kinder Morgan? Why would it be so low, considering the fact that I didn't think the pipelines were dependent upon the price of crude?
Okay.
Can you also, Andy, give us the street consensus?
Sure could. Thanks.
Okay. So I mentioned there's a few camps you can focus in. One of the previous leadership. Second camp that you could focus in right now as markets are starting to bottom out is in the stuff that was most shorted. And of course, energy is a space that's been under pressure for a couple of years, really since July of 2014. When the sell-off in energy came, of course, it initially impacted the producers and the service companies that are levered to the price of energy. And for a lot of people, the view was that the pipes and the infrastructure companies wouldn't be impacted. The problem is that as the price declined, the likelihood of volume growth, which is what these guys depend on, started to wane. And the second reason that a lot of people owned infrastructure is that they had these take-or-pay contracts, suppliers who basically bought capacity in the pipe. But of course, if you start to see companies go bankrupt, the take-or-pay contracts may not be worth quite as much. So while the cash flow may be good, the multiple of cash flow that investors may pay maybe is a little less for the uncertainty. Now, I believe that we are seeing a shorter-term tactical bounce emerge in energy and basic materials. I'm not sure how long that lasts for because we think that it's likely energy prices remain low for quite some time. So if you had to own something in the energy space, I would either own an integrated like Chevron or Exxon, or you could put some money into one of these infrastructure companies like KMI. And of course, that's what Warren Buffett's doing. But I think you shouldn't buy it expecting the kind of dividend growth that we expected from these 2 to 3 years ago, because I just don't think that's going to emerge. This is going to be not very exciting, but you probably do okay.
And Kinder Morgan, of course, cut the dividend there last month,
right.
down to 12.5 cents quarterly. The consensus, very quickly, Street fairly divided. There are 12 buys, but there's 9 holds. Stocks at just under 18, and the average target is just over $20 right now. We're going to be back with David Burrows, Chief Investment Strategist at Barometer Capital Management, answering your questions on North American large caps. 1-855-326-6266.